Today, I am going to talk about how to trade with demand and supply strategy, and this is actually the big funds edition because we are trading at the same points as them. Hello everyone, welcome to the Bravo Trade Academy Global fan page again, and today I have a new thing for you to learn again. So the first one, the principle of this strategy is actually we enter our trades at the same price range that the big funds are actually execute their order. So we can determine their orders by the candlesticks or the chart patterns, okay? The demand zone, if you can spot it, it actually the price range that where the majority of the traders actually place their buy orders, and we can spot it from the large bullish big green candlestick. Alright. On the other hand, the supply zone is actually the price range where the majority of the traders make their sell order. Okay, if you want to spot them, you just need to spot it from a large big red candlestick. Okay, so that's a very easy trick. So what are the demand zones and how many patterns are there? So there are 4 patterns for the zone, 2 for the demand zone and 2 for the supply zones, and these patterns are from Sam Seiden, and I would love to thank him very much because I use his patterns every single day for my trades. Okay, so for the demand zone we have 2 patterns that I talked about, and the first pattern is this drop based rally. This is the reversal pattern. So how could you spot this one? So if you want to spot a drop based rally pattern for the demand zone, you will see that there were this downtrend thing going on. Okay, so you have the lower highs and the lower low here, and the price actually stuck at somewhere to make the price accumulation or the base that we called it. So if you see this base and then the price shoot up and break this swing high, that means we are having our drop based rally pattern. Okay, easy peasy. So it's the reversal pattern. Okay, what about the other one? So the other one is the rally based and rally pattern. It is a continuous pattern, so it isn't a reversal anymore. So for the continuous pattern is actually the price coming up, okay, make the price accumulation here or the base that we called it and continue to go up. So this one is the rally base and rally pattern that we have. Okay, for the supply zone it is going to be very similar, but it's a little twisted names that we have there. So the first pattern that we have for the supply zone is the rally base and drop. So this one is the reversal pattern again. Why is that? Because first you have this uptrend thing going on, you have the higher lows and the higher highs here, and the price accumulated here as forming a base, and then the price drops significantly. How much significant? So it's significant enough to break this swing low. All right, so that makes us having this rally base and drop pattern for the supply zone. Okay, another pattern that we have is the drop base and drop. It is a continuous pattern. Why is that? It is because the price was coming down, okay, have the price accumulation here forming a base and then continue to drop down again. So that's the continuous pattern that we have for the supply zone. Alright, and how to use them then? So how to enter your trades with all the 4 patterns that we have. Alright, so for the demand zone, as I talked previously that we will be entering a buy. Okay, and for the supply zone, we are going to enter our selling orders. Okay, so if you are about to go for a buy, that means that you can see your demand zone there. So the first demand zone that we know is this drop, base, and rally. Okay, this is the reversal pattern. So if you have this demand zone here, if the price actually coming back down, so it formed here, it was formed when the price was accumulated, all right? Once the price is pulled back down to this drop, base, rally demand zone, we will enter a buy, and then you need to put your stop loss below the zone. If the price actually reversed from being a downtrend to now being an uptrend and forming this continuous pattern of rally, base, rally, you can wait for the price to pull back down and then enter a buy at this demand zone. And don't forget to put your stop loss below the zone as well. Alright, so that's for the buying side. What about the selling side? So for the selling side, you will need to wait for the supply zone to be formed. Alright, so let's go through the examples that we have here. So first thing first, you will have the reversal pattern. So the reversal pattern that we have here is the rally, base, drop. Okay, so the price rally up, accumulated here to form the base, and then dropping down. Okay, so we've got this supply zone already. If the price is thrown back up to test the zone, we will make a selling order here and put your stop loss over the border of the supply zone. Okay, and if the price actually reverses from being an uptrend to now being a downtrend, we will have a continuous pattern here of drop, base, drop, and that's the supply zone. So if the price is thrown back to test this supply zone, we will make a selling order and put your stop loss over the border of the zone as well. Okay, why is this working? It is because, at the zone, when the price is accumulated, it actually have a very, very high volume there. And for the first touch or the first action that the price form this pattern is actually have a lot of unfilled order from the big funds there. So if the second touch, okay, so the price come back to test that first action that the price formed the zone, it means that we are having a lot of unfilled order there, and if we enter our trades, those unfilled orders will be matched and took our order to the take profit points. Okay, so that's the trick of this strategy. So for today, that's all that I have for you guys, and I hope that you learned something new from this video. If you do, please give it a thumbs up and share it with your friends, alright? And I will see you on the next one. Bye!